Hello everyone and welcome back to another portfolio update video. The portfolio is currently sitting at $7,639.65. For the day we're up $30.68 or 0.4%, including after hours we had another $6.76. For the week we are up $14.30 or 0.19%. For the month we are up $107.24 or 1.42%. And for 3 months, which is basically the all-time, we are up $139.65 or 1.86%. So yeah, we're continuing to just slowly grind upwards, as you can see on the graph here, which is exactly what we were looking for. But yeah, if you'll notice, the account is up quite a lot since the last video, and that's because I've made a ton of deposits. So in this week alone, I've deposited $1,500, which grew the portfolio up to $7,500 in base deposits, as you can see here. So that's why the portfolio value is so much higher than the last video. So to start off, on Monday I bought 100 shares of Key, just outright, just a market buy for 100 shares. And these are actually up quite a bit since I bought them. I basically bought 100 shares at $9.29, and it's already up $32 or 3.44%, which is just great. It's just a nice little cushion to add there. And using those shares, I opened a short strangle, which you can see my equity is $40 currently. Basically, I sold a call at the 10.50 strike, and I sold a put at the 9 strike, both expiring at the end of this month. And I opened this for a credit of $41, and you can see it's currently at $40, so not much movement yet, but basically I'm just going to start selling short strangles on my shares, so that's what I'm doing here. Past that, you can see I have 100 shares of AT&T, and this is actually from an option that expired. So I actually sold an in-the-money put at the start of the week because I really just wanted to own the shares outright, but make a little bit of premium in doing so. So I sold the 16 strike put for, I believe, $30 in credit. Let's see. Yeah, $30 a credit, and I ended up expiring in the money. So I got assigned 100 shares of T at 16, but I also made that $30 premium. So now we have 100 shares of T that are down 2.25%, but if you factor in the $30 premium, then we're only down $6. And what I plan to do with T this week is I'm planning to also open up a short strangle on T, sell the $16 call, and sell the $15 put for the end of the month. And you can see that'll yield us about $47. So I plan on opening this on Monday. Past that, I started investing into some new ETFs here. You can see Bito and Tesla. So Bito is basically a Bitcoin ETF that pays out a ton of premium and dividends every single month. I think the dividend yield is like 40%, something ridiculous. And Tesla does the same thing except with Tesla, and they have a 70% dividend yield, which is also absurd. And these two I'm kind of just experimenting with. Once again, we only buy shares, as you can see here, these risky shares. We only buy those with the realized profits. That way, if any of these go to zero, we're not really losing any money, because you can see we have a lot of money in profits to work with here that I'm using to reinvest into risky funds just to experiment around. So that's why I'm okay with buying stuff like this. That sounds absurd. I also bought a little bit more Apple just to round out this number here to 0.05. And past that, we can now go over the options. So to start, I have 2 puts on Labu, which are down $2 and have an equity of $12 currently at the $5 strike for this Friday. I have a WBD put at $11.50 for this Friday as well, and I believe that's up, yeah, a couple bucks. We also started wheeling Ford again because I really like Ford now because of a couple reasons, and also I'm going to try and enter at a much better price than what I did on my TD account, which you guys know was kind of the start of the downfall of that account. So we sold the 14 strike put for the end of the month. It's very far out of the money, and we sold that for a credit of 16. It's currently at 19. Then we have that short strangle I was talking about. Then we have the 45 DTE Labu put that I opened last month is still kind of slowly grinding down. Next, I actually opened a credit spread on SPY expiring in 50 days. And this is basically a downside hedge, and I'm planning to close this out if I lose the full premium that I opened for, which is $52. Or I'm just going to let it expire worthless and keep the full $52 that I opened for. And this is just a hedge to the downside in case the market takes a downturn, and that's because my underlying thoughts about the economy changed on, I want to say, Wednesday. There was a jobs report that came out that basically shifted my perspective on the economy, and as a result I decided to open this as a hedge. And so yeah, I only opened this because my outlook on the economy changed, and that's kind of the way I'm going to do credit spreads, is only open them when I see a legitimate opportunity or a reason to open them. Because I know that if SPY ends up rallying to this level where I have to close this out early, that all my other positions will basically rally a ton and make me a ton of money, so I'm okay with potentially losing this $52 as a hedge. And lastly, we still have that SoFi debit spread, which is kind of getting beat up right now. It's down 17%, but once again, it's just a long-term hold. May end up buying another one if it drops down to 40. We'll see. But yeah, this is just kind of chilling here. So now we're here in the options spreadsheet. Here are all the open options we currently have, which total to $135 in premium that's waiting to be realized in the account. Here's the realized stuff. I ended up also opening a ChargePoint put on Monday, which ended up reaching over 50% profit by Friday, so I just ended up closing it out so that I could sell that forward put. So that's another play that I made. And then here's that put that actually, I need to make sure it says assigned. There you go. Got assigned on Friday. Which, yeah, you can see I opened for $30 a credit, and it turns out they actually had a dividend payment this week, which is why the stock dropped so heavily, which I was unaware about. So this was actually kind of a stupid thing to sell a put on the dividend week, but I wasn't aware. So going forward, we're going to have to look out for that, but it's fine because I want the shares anyways, so I'm okay with that. Oh yeah, and another thing to note is I actually got access to margin now. So Robinhood basically has finally let me use margin in the account, which will help us boost the returns by like a ton, like tremendously boost my returns on option selling. So you can see currently we have $2,000 of margin available, which I plan to put to work as soon as Monday comes around. So I'm going to be using all my margin all the time to just sell some less risky options on stocks that I'd love to own. So yeah, we now have margin, which is just great. I've been trying to get this for a while now, and just randomly it just started letting me do it on like Wednesday or something. Not sure what's up with that, but I'm just glad we have it now because we can start making even more profits in the account. But yeah, that is all for this portfolio update video. We have a ton of plays that are going to go through next week, and I hope to see you in next week's update video. Thank you for watching.